Hi, everyone. Thank you so much for joining us today for our webinar, Is Impact Investing a Good Strategy for Your Organization? Before we get started, I just want to go over a few housekeeping items, so all callers will be muted. If you have questions, you can use the chat box that you see on the left-hand side of your screen. If you lose your internet connection, you can reconnect using the link that was emailed to you. If you have to drop off early or if you want to watch the webinar again, we'll be hosting the webinar on our website at techsoup.org/community/events-webinars. We'll also be sending a recording with the email and the presentation and any relevant links that we talk about today. So just a little bit about TechSoup before we get started. We are located in 236 countries and territories. We serve over 1 million nonprofits around the world offering donated and discounted technology. If you're interested in finding out if your organization is eligible to receive donations, my colleague Stephen will be dropping a link in the chat box where you can find out more information. Here you can see a few of our technology partners. So we partner with companies like Adobe, Intuit, Microsoft, Symantec, in addition to hundreds of others. So like I said, if you're interested in seeing what's available to your nonprofit, Stephen will be sending the link in the chat box. So now I'm going to go ahead and introduce our presenters. Actually, sorry, before I introduce our presenters, I want to make sure you guys can hear me okay. So if you don't mind typing in where you're calling in the chat box, then I'll just read a few of them out so we can see where people are calling in from today. All right, so we have Megan from Connecticut. We have Dell from Colorado, Chris from Charlotte. All right, so it sounds like you guys can hear me okay. Perfect. So I'm going to go ahead and introduce today's speakers. So today we have with us Will Jacobson, who's the Senior Director of Strategic Investments and Investor Relations at Kiva. Will joined Kiva in 2018 after 4 years at Microvest Capital Management. Prior to Microvest, Will set up Tanamera Capital, a sustainable agriculture manager based in Uruguay. At the start of his career, Will spent almost 10 years in capital markets at Citi, Wells Fargo, and Raymond James. We also have with us Ken Tsunoda, who's the VP of Development at TechSoup. As the Vice President of Development, Ken Tsunoda directs investments, grants management, and foundation relationships at TechSoup. And we also have myself, I'm Seema Tucker, the Senior Manager of Content here at TechSoup, and Stephen Davidson, who's helping on the back end, and he is the Marketing Associate at TechSoup. So I'm going to go ahead and pass it off to Ken to get us started.
Thanks so much, Seema. So we are going to focus today on the question of, is impact investing a good strategy for your organization? And Will and I will be presenting two different perspectives. I'm coming from Kiva and TechSoup, which are two examples of nonprofits that have developed impact investing strategies. At TechSoup in particular, I'm coming at this from the perspective of a nonprofit social enterprise that is using an impact investment strategy to raise the growth capital that we need to accomplish our mission and to grow. And we will be providing some insights into the questions of what does impact investing mean for nonprofits. We'll be giving some examples of nonprofits that are using impact investing as a strategy, and we will give some insights based on our experience about how your nonprofit can find the right partners to develop an impact investing strategy. So let's move on to the topic of impact investing for nonprofits. So as you all know, we in the nonprofit sector are faced with seemingly intractable social and environmental problems at a global and a local scale that cover the topics of climate change, poverty and inequality, healthcare, and much more. And nonprofits and social enterprises are increasingly building business models and earned revenue strategies to tackle these problems. Lack of capital is a big barrier, in particular to nonprofits and social enterprises to starting and scaling solutions. Nonprofits often have difficulty accessing the same kinds of capital markets to grow that private for-profit businesses have access to. And just I was reading recently that the United Nations says that achieving the Sustainable Development Goals will take between $5 and $7 trillion, and that they're projecting an an investment gap in developing countries alone of something like $2.5 trillion to achieve the SDGs. We see impact investing as one possible approach to addressing this capital gap in addition to more traditional sources of grant and donation funding. So what is impact investing? So just to start off with a definition that we can all work from, the Global Impact Investing Network, the GIN, defines impact investing as investments made into companies, organizations, and funds with the intention to generate a measurable, beneficial, social, and environmental impact along with a financial return. So both a financial return and also a social return. We know that there is something like $502 billion of impact investment assets that are under management globally as of 2018. So this is a large and growing pool of capital dedicated to both financial and social returns that's been committed in the United States and around the world. And just to give a little bit of a perspective on the relative size of that $502 billion number. So foundations in the United States give away $76 billion per year. Corporations have $800 billion of charitable activity that they're doing. So the $502 billion of impact investment assets is a significant number. And we know that it's growing. So while charitable giving in the United States grew less than 1% last year, I've seen estimates that the pool of impact investing capital is growing at rates of 14% annually or even more. So that 14% estimate is Barron's number. So we know that this is a large and a growing pool that nonprofits and social enterprises can tap into to accomplish social impact. Now, as a nonprofit, what kinds of capital can you raise? So I think most nonprofits are very much traditionally focused on raising capital from non-repayable sources, things like philanthropic grants, donations. We also know that donations and grants, there's a limited amount of philanthropic money that's available to nonprofits that want to scale. So there are other ways, other types of capital that nonprofits can also tap into. In particular, there are debt financing options that nonprofits can use, lines of credit, loans, promissory notes. And in the case of TechSoup, something that we've been doing this last year is a direct public offering of debt securities, which we'll talk a little bit about later. And we've also been raising some recoverable grants, which have both the qualities of both that looks partially like non-repayable grants, but because they are repaid under certain circumstances, they also have aspects that make them look like a debt financing. And nonprofit organizations, we don't have shares of equity that we can sell, so we can't typically go out to the equity markets that many for-profit businesses use to grow. There's some nonprofits, in particular with earned income strategies, can choose to do debt financings as a growth capital strategy. By scaling up, nonprofits that have lots of earned income can increase both their social impact and also their earned income so that they generate cash flow to repay a debt financing over time. And that's one of the strategies that we will be looking at more today. So let me pass it over to Will, and Will's going to talk about the pros and cons of impact investing.
Perfect. Thanks, Ken, and hello, everyone. This is Will Jacobson from Kiva. Really excited to join this webinar. Appreciate TechSoup and SEMA for not using the video functionality. No need to traumatize you all with a visual of myself this morning. But one of the reasons I'm here is to talk about impact investing is because Kiva, where I work, has traveled the impact road, has explored a few options along the way, and as a nonprofit, we're always looking to share our learnings within the ecosystem. We also at Kiva have a unique role where we have people invest in Kiva, invest in our impact investing products, but we as Kiva also invest in all kinds of social enterprises, both for-profit and nonprofit. So we see kind of both sides of the equation. And how I found myself at Kiva is because I've also tried impact investing a few different ways and find a perverse pleasure in talking about some of my past mistakes. As Seema mentioned, I worked in banking for the first half of my career before entering impact investing almost a decade ago. which I guess could sound impressive, but given that my first fund was a catastrophic failure, probably should be taken with a grain of salt. But we've been doing this for a long time. We've seen a lot of good things. We've seen a lot of mistakes. We've seen a lot of fantastic organizations devote a considerable amount of resources and time to trying to do this. So I think it's important to have this conversation. For those that don't know, Kiva Microfunds is a California-based 501c3. We're about to hit our 15th birthday in a few months. We have a pretty successful website where users can make loans to entrepreneurs the world over and get repaid at 0% interest and then relend those funds. We're active in microfinance, energy access, smallholder agricultural, and generally financial inclusion globally. And I'll get a little more about how Kiva's journey happened and how we're now going all in on impact investing later in the presentation. But really wanted to kind of add to what Ken has already introduced about the state of the impact investing market and some of the pros and cons. So I think as Ken mentioned, $500 billion in impact investing. I think that's an exciting number. I do tell everyone not get overexcited or too specific about these numbers. Up until about a year ago, most large investment firms would say that every dollar they had that wasn't invested in the Sudan, for example, qualified therefore as impact. So you saw a tremendous amount of kind of marketing-based inflation in these numbers. But regardless, it is a big number, whatever the exact number is. The growth rate for impact investing is also key. I used to say that impact investing was the fastest growing area of asset management. As a whole, it was pointed out that actually I think companies that are using machine learning and AI to launch cannabis-related cryptocurrencies are growing faster, but I think that's obviously off a much smaller base. But the key point, the key pro that we have here when we talk about impact investing is just the size of the market and how fast that market is growing compared to alternatives. I think for Kiva, it's also an opportunity for us to connect with a whole new set of funders. We recognize that there are groups out there that only invest, that are only looking at investing their capital and that don't have a philanthropic arm, don't have a grant or supporting arm that could help organizations like ourselves. The biggest benefit also for me is the ability to connect to current funders and current supporters in a whole new way. In our backyard, the San Francisco Foundation, right, I think they granted out probably something like $150 million last year, which is a significant number and supported a great number of fantastic organizations. But they have 10 times that number in investments active each year. So I think when we talk about what impact investing can do, it just opens up a whole new space of being able to talk to people in a different way. I think a lot of us are also probably seeing the frustration of many foundations look at a 5% annual spending number now as their ceiling rather than a floor. And so being able to access that other 95% of their endowment can be appealing. On the flip side, you have to look at the hurdles to get to impact investing, and it's the same old mantra. You need to spend money to make money. And that really comes into play via regulatory compliance and having the patience and the wherewithal to make a significant investment of time and of staff to do this right. State and federal regulators are hyper-focused on investor protections. So any leeway you feel you have in soliciting a donation and using that donation and reporting on that donation, that really starts to go out the window when you start talking about offering an investment product. The margins, for lack of a better word, are also, frankly, much worse in the investment world. You take a grant, and I don't know, you have maybe 10% set aside for administrative costs. That usually works for many funders. You take an investment, and you tell your investors that you're going to have a management fee anywhere above 1 or 2%, and your investors will be headed to the exits. And I think the other struggle there is in impact investing, most of the folks that are the impact investing specialists or that are making the investment decisions within an impact investment portfolio, they came from the philanthropic sector. They came from foundations. So they are expecting, if not demanding, the same level of accountability, of measurement, and reporting on a $5 million investment that they make with you as they did with their $5 million grant that they gave you. And I think the difference, though, right, with the grant, you might have $500,000 of overhead as part of that you can spend on staffing to respond to the needs and wants and reporting desires of the grantor. On the investment side, you're left with an overhead or a revenue line of $50,000. So for lack of a better word, again, the margins are much tougher on the investment side, but again, it's the scale that is significantly higher if you can build an investable product. The other thing to think about is that you are out there soliciting and managing other people's investment dollars. You become stewards of their capital in a whole different way. You're responsible not only for placing their capital appropriately in mission areas that they're passionate about, but you're also responsible for safeguarding their money if this truly is an investment product. So on the other hand, you could have philanthropic funders start to ask questions. The concept of doubt does enter the equation, right? If you have a chance to fulfill your purpose or ensure the return of your investors' dollars, what route are you going to take? So mission drift, or the question of mission drift, becomes an issue. I know at Kiva, when we look to invest in a social enterprise, if it's a nonprofit, we really want to understand, are we going to get our money back, and how do we balance the impact that organization is having with our desire to build a sustainable pipeline. So now we'll look at use cases in impact investing, and so I'll start talking a little bit about Kiva and our journey along the way, and speak to kind of Kiva's experience before passing on to Ken to talk about the great things that TechSoup is doing. Kiva started out 25 years ago as an internet platform. Anybody could make loans as low as $25 to micro entrepreneurs in 90-ish countries and across the United States. Those loans have been repaid at about a 97% rate since inception. Very little losses for our lenders, but never a positive return. The loans were always made at 0% and returned at 0%. And the reason for that has been we've been very careful to not fall under securities purview because of the regulatory burden that involves. And generally speaking, if you're not offering a rate of return, or say if you're offering a rate of return that's 0, then you do get away from some of that scrutiny. And I think the change for us really came because we're a relatively large nonprofit. We've got pretty solid numbers on our website. We have 100 staff. You can see some of the impact on the slides of what we've done and how much money has gone out. But it is not enough to really reach some of the problems that Ken spoke about earlier. And how do we also look about, how do we ensure that Kiva can continue and can be sustainable long-term and not always be dependent on grant financing or donations on our website? And so that really led to the decision to launch a parallel business line as a wholly owned subsidiary. So it's not a change in what we do. It's us at Kiva launching a subsidiary that will do complementary work, that will do impact investing. So we've made this work since 2005. We've built a network globally of amazing field partners who are on lending to borrowers, who are growing, who are having impact, and we see that impact on a daily basis. But since the beginning, the constraint has always been these organizations need more capital. Right? We have no visibility into how much money Kiva can send because that money is coming in from retail users $25 at a time. But if we could give them more money, and if we could give them more money with better visibility, they would pay for it. Right? So there's the idea of an earned revenue stream. So that's exactly what Kiva Capital is doing. Right now I'm raising $30 million from some institutions, and that money is going to go to help some very specific partners really scale refugee lending. We hope this will be the first of many funds that go after these really hard to tackle problems, which you really need an impact first, risk tolerant fund to launch. And again, so this is an evolution and a parallel complementary line to what Kiva is doing. We're continuing to do the 0% work on our website, but looking at what alternatives that we can launch to build off what we've already done. So that's a lot about me. That's a lot about Kiva, and I can't imagine a lot of you are into really bland Danish, Wisconsin accents. So I will give you all a breather and pass it back to Ken, again, to talk about all the really cool things that TechSoup is doing.
Ken, I don't think we can hear you. You might be on mute still.
I am. Sorry about that.
Okay.
So in addition to the excellent example that Will just gave of Kiva and their impact investment strategy, I wanted to give the example of TechSoup, which is a nonprofit social enterprise based in San Francisco, and talk a little bit about the $11.5 million growth capital campaign that we have developed to implement our strategic plan. And this is a campaign that we launched last year, so we're about 1 year into it now. So we're fortunate at TechSoup to get some grant funding to support our programs and develop our programs. But for the kinds of investment that we wanted to make in our technology, our platform, our new services and new business models, we thought that we would have more success raising impact investment rather than depending entirely on grant funding, and that we would be able to raise the capital more quickly and accomplish the aggressive goals of our strategic plan more successfully if we raised impact investment through a debt financing. We are at TechSoup about 90% funded by earned incomes, so mostly fee for service. We have several services that generate fees that support the operating costs that TechSoup has. So we're able to do a debt financing that enables us to grow the impact of our organization at the same time that we're growing the earned revenue that we use to support our operations. And that growing earned revenue makes it possible for us to do a debt financing that we can repay investors over a 5-year period with interest. We did a lot of financial forecasting and operational modeling to make sure that we'd be able to invest the money in a way that would grow our revenue fast enough to be able to repay investors. So the way that we decided to do it was through a direct public offering of debt securities. Our CEO, Rebecca Massasak, 3 years ago, challenged us to try to figure out a way that we could do this campaign engaging all of our stakeholders as impact investors. So not just the foundations that have supported us and our corporate partners, but also the nonprofits in our network and the employees of those nonprofits, and asking them to co-invest alongside us as we build our future. So there are a lot of challenges that I will talk about that once you start engaging a broad range of stakeholders in an impact investment campaign, especially if you plan to do it across all 50 states. So we'll talk about that. And we also did some market research, and we discovered that many of the nonprofits and the employees of the nonprofits that we work with wanted to be able to make investments as small as $50 or $100. So doing a campaign that enabled that kind of small investment minimum was something that has really not been done before on this kind of broad scale. And so it took some innovation and thinking on our part to figure out how to make it happen. Let me just say a little bit about how TechSoup makes our impact and how we were thinking about our strategic plan. So as Seema said earlier, TechSoup has served a little bit over 1 million organizations around the world so far. Since we were founded 30 years ago, we have distributed and facilitated about $12 billion worth of in-kind technology, products, and services, in addition to some funding that we facilitate through our NGO Source service. So $12 billion in value. And we've distributed that in 236 countries and territories, supporting 39 languages through a network of 61 partners around the world who are the leading capacity building organizations in their regions that we work with in doing outreach to nonprofits. Now we, as TechSoup, are in the middle of a transformation that's quite dramatic, and that is the basis for the strategic plan that we've put together. We know, for example, that although we've touched 1 million nonprofits so far, that there are 12 million nonprofits out there. So we want to do more outreach and come close to doubling the number of nonprofits that we touch over a 3-year period. And we also want to increase the value of the resources that we get out to the nonprofit sector. So last year we distributed a little bit over $1.6 billion worth of resources to nonprofits globally. We did some planning, and we think that with the capital campaign that we're doing, we'll be able to increase that to $4.8 billion. So opportunity to get more valuable resources. We're hearing from the nonprofits that we serve that they would like us to offer new kinds of products and services. So in addition to the donated software products that we've traditionally offered as TechSoup, they want us to offer more hardware, more mobile technology. They'd like more support in selecting the right technology to support their missions, implementing that technology and getting introduced to consultants, having more online resources and training. So we have a need as TechSoup to develop new products and services to support nonprofits, and that's also a big focus of this growth capital campaign that is being funded through impact investment. And we're also in the process of having to change our business models and develop new kinds of offerings to support not just our nonprofits but also our corporate partners who are moving from distributing on-premise software to cloud-based services and software as a service, which requires some major changes in our technology and platform that we need to invest in over the next 3 years. So we'll be doing that campaign as well, funded by the impact investment that we raise. Now, we got some expertise really early on from a firm in the Bay Area called Cutting Edge Capital, who helped us to create a direct public offering structure that would enable us to reach out to all the stakeholders in our network across all 50 states and ask them to participate in our campaign as impact investors. As Will said earlier, once you start going into the world of offering an investment to stakeholders as opposed to just a donation, things become quite a bit more complicated. And I'd asked myself early on, why is it that I'm so often bombarded by requests for $50 donations, but other than Kiva, no one has ever really asked me to be an impact investor, and I realized that it has to do with securities law. So as soon as you start asking people to be investors in your organization, you're subject to securities law, both at a state and a federal level. And as TechSoup, as a nonprofit, we don't have that kind of expertise in-house. So we needed to rely on the experts at Cutting Edge Capital who know securities law quite well, and they were able to help us in thinking through this kind of structure. So what we did is we put together a three-tiered note with a note that's called our Community Capital Note that enables anyone in our network to invest as little as $50 in TechSoup with a 5-year term. And at that investment size, they receive a 2% annual interest. So at the end of 5 years, we return their investment, and each year we make an interest payment to the investors. For investments of $2,500 and up, we offer a 3.5% interest rate, and that's also open to both accredited and non-accredited investors, so anyone in our network can participate in that. And then we have a risk capital note that is a $50,000 minimum that offers a 5% interest rate, and that's available to accredited investors and institutions only. So one of the things that I'd just like to point out is that the structure that we took is called a Reg A Plus Tier 2 offering. It's an offering that's regulated by the SEC. We needed to take this path because we wanted to reach out to our stakeholders in all 50 states and wanted to raise more than $1 million. There's a broad range of different kinds of securities offerings that experts like the folks at Cutting Edge Capital can describe to you for nonprofits that want to do local crowdfunded capital raises, things that are focused in just one state, or there are also easier structures if you want to raise less than $1 million. But we, as TechSoup, because we wanted to raise more than $1 million over 50 states, and we wanted to engage unaccredited investors as well, we needed to go through this structure. So at a very high level, that's what we've been doing, and we're about a year into the process. So far, we've raised 70% of the $11.5 million goal, so just a little bit over $8 million that we've raised so far. So we've had individual investor commitments ranging from $50 up to $100,000, and then we've received 3 large investments: a $4 million investment from a nonprofit finance fund, and then investments from 2 of our corporate partners: a $1 million investment from Microsoft Philanthropies in our direct public offering, and a $2.5 million recoverable grant from VMware Foundation. So at a very high level, that's what we've been up to and our progress. I think one of the things about our campaign that is differentiated is that we have a very clear social return on investment. So we have a goal and a metric that we can track to nearly double the number of nonprofits that we reach over the next 3 years. And we've done a lot of modeling and believe that for every $100 that's invested in our campaign, it will enable us to distribute an incremental $47,000 in needed resources to the nonprofit sector globally, and we'll be tracking that as our campaign progresses. So with that, why don't I pass it back to Will to go in some more detail about the how to do impact investment campaigns and some other organizations that are doing similar work.
Perfect. Thanks, Ken. And so as we look into the how, Ken touched on a little bit of this, but we'll go maybe a little bit deeper. As Ken mentioned, nonprofits in this country have the opportunity in most states to take advantage of what's called the charitable issuer exemption. A lot of people call it the church bond exemption because that's the way a lot of churches raised capital in the past and continuing today. And these basically allow investment organizations to issue what effectively are bonds to the public. There is a ton of nuance out there, as Ken mentioned, about which states you can do this with and what you have to file with the applicable regulators. The overarching recommendation there, and certainly when you look at impact investing, to begin with, is always to look for good counsel if you want to go that route. But it does allow you to issue bonds, maybe in $1,000 increments or smaller, and offer interest rates. And so that is one way for organizations to raise capital. We've seen groups try this and be told up front by some lawyers that it'll take 6 months, when in fact it might take 18 months. And so again, cannot stress enough the importance of good counsel here, and you'll see that I know TechSoup has worked with some really strong partnerships there, and it should be a resource for any organizations looking at this route. Reg A offerings, Ken spoke about these. Again, the SEC is looking at ways that small companies, whether for-profit or nonprofit, can raise funding without going through the really laborious process and burdensome process of public capital markets. So that's something to look at. I've been spending a lot of my time looking at donor-advised funds, also known as DAFs. Many of you may have seen the latest figures. I think there's a few articles out this morning about DAFs. The wealthy, and certainly maybe some not so wealthy, have put $125 billion into donor-advised funds. And so this is money that you as a donor have given away, you've given to an organization. Typically these are affiliated with larger investment organizations. Fidelity Charitable is the largest donor-advised fund in the country, has north of $20 billion. And so you've given that money away. There's a tax deduction at that time, but you're able to recommend to that organization how they should invest that money, and then also how they should grant out that money. And so this is money that in my mind is kind of key and a natural fit to grow the impact investing market, because this is money that by its very nature is philanthropically minded, it's impact minded. So that's something that we're seeing a strong growth come out of. Impact Assets is also a large donor-advised fund that's purely focused on impact. Impact Assets is also a very strong organization for building the impact investing field. They have something called the Impact Assets 50. And so for those of you, I know we saw a question earlier about looking for firms that offer impact investment portfolios. I would take a look at the Impact Assets 50 and some of the partners that they have there. Also a group that's been in the news lately, CapShift, a fantastic organization that works with donor-advised funds to build impact investing portfolios and really look at what are the best opportunities in impact out there. We've looked at it, Ken talked about it. Recoverable grants do look like an interim step to actually taking an investment, because unlike a traditional investment, it is a grant, but there may be a stipulation that there's the repayment of that grant potentially with some return from a specified activity at the end of a certain amount of time. So again, looks like an investment, acts like an investment, but structured as a grant, which is much more in our wheelhouse for TechSoup, for Kiva, for many of you on the call. Looking at other ways to think about the how, I was fortunate enough to spend the morning outside my motel here due to a fire drill in the balmy 21-degree Colorado fall. So I was thinking about other instances of where nonprofits have taken innovative measures to access impact investing, and thought about my previous employer, an impact investment firm named Microvest. That firm was launched by two nonprofits that got together, MEDA, which is a group up in Canada, and CARE, a well-known nonprofit out of Atlanta. They got into the space because they'd seen the opportunity in microfinance, but said, listen, we're nonprofits, we're not investors. How do we really grow this space? And so they decided that they would contribute money and funds to set up a joint venture. And that joint venture would be wholly focused in investing in microfinance. And so that's how one of the bigger impact investment firms in this country has taken root, pays dividends annually to the nonprofit owners, has that nonprofit social steering committee, if you will, to ensure that even though it's a for-profit company, it's always looking at making the right decisions from an impact perspective. The biggest lesson I think I would want to convey is that as nonprofits, we all tend to have tremendously deep visibility into the problems that we see in the world and the problems that we want to fix. The problem, though, is that we tend to build investments when we do impact investing that are perfect for solving the problem. And so we build an impact investing structure that is perfect for the issue at hand. Unfortunately, time and time again over the last decade, and I've been a part of this, I've seen it, then we go out and try to find the money, and nobody has the money for this. Nobody has the money or the risk appetite or the liquidity appetite for the exact type of structure that we built. And so what you have to do, and this tends to get somewhat unpalatable for a lot of people, is figuring out where is the money, what is the need for that money, what does that money need in terms of returns, what does that money need in terms of liquidity, what does that money need in terms of risk tolerant, and then build a product around that. And it's not perfect, but if you don't do it that way, what you will find is a tremendous waste of resources. And so it's really tackling the question of, does 80% kind of impact efficacy work at $100 million? Does that work better than maybe 100% efficacy at $1 million? And so I think there is a need for scale. There's a need for scale done right. But to do that, unfortunately, at least for the time being, you have to meet investors where they are versus railing against what's obviously a broken investment system and waiting for many of these people with very specific incentives to change their model. You do need to somehow start to work with them adapting the model. Want to look at some of the groups that have done this right, that I have a tremendous amount of respect for, in addition to the fantastic work that TechSoup is doing. I like to tell people to look at the work that the Calvert Impact Capital is doing. Capital Impact Partners is another group also on the East Coast, what they're doing. RSF Social Finance in San Francisco, what they have done. In my mind, some of the best run organizations in our space. They're also investing in social enterprises like Kiva, investing in for-profit, nonprofit social enterprises. Collectively, I would estimate between just those three that I have on the slide have over $1 billion to work with. In addition to these three, I've talked about impact assets. I've talked about CapShift. Ken will talk about some of the fantastic convenings that I think are worthwhile in the space. But there are resources. There are a lot of fantastic groups putting out a lot of literature about impact investing. I would take advantage of that. I think a frustration that I have as an impact investing practitioner is that there's more talk than action in the space. There are more consultants looking at impact investment than there are dollars chasing impact investment opportunities. But the tide is beginning to shift. Money is being put to work in the right types of products if you can build the right types of products. And with that's all I have. So I want to turn it back to Ken and the rest of the wonderful folks at TechSoup to take us home. I can't thank you all enough for having me and everybody who dialed in today as well. Very much appreciate it.
Thanks so much, Will. And I'll just say a few words in closing about resources and takeaways. So Just returning to the question that we started with, is impact investing a good strategy for your organization? I thought I would share just a few lessons learned from TechSoup and our experience working, doing an impact investment-oriented campaign over the last year. So the first one is I really think it's critical to partner with experts to guide you through this process. I mentioned earlier that we got some great advice from Cutting Edge Capital early on. Our mission is to get technology resources into the hands of nonprofits globally. We don't have impact investing and securities law as part of our core expertise. So we really needed to find people who could guide us in the right direction. There's no one-size-fits-all. So the structure that we were guided towards as TechSoup, this Reg A structure that Will was describing, is something that made sense for us because we have stakeholders all across the country and we're doing a raise larger than $1 million. But every organization is going to have a very specific need, and you need to find the right structure that makes the most sense for you. And I think also just on the topic of the cost of expertise, so budgeting for legal assistance, getting the right help from securities law experts, and also we wound up having to increase our budget for auditing to do this offering. So we've had to work differently from our auditors to support the requirements of the SEC. So there are costs associated with this kind of raise that you need to get guidance on so that you can budget for it properly. Engaging your strongest supporters early. So for us, getting the support of Microsoft as one of our leading corporate partners early on and making a $1 million investment in our direct public offering was really crucial to us in generating momentum and indicating that we had support from the parties that know us well and know us best. So really engaging your strongest supporters and partners early on is really important. Working with all of your stakeholders as impact investors is not easy. So, we really felt it was important to engage all of our nonprofit partners across the country and make it possible for them to make smaller investments because we wanted to have our campaign be something that really engages our community and strengthens it and gives us an opportunity to communicate with all the nonprofits that we work with and showing them what we intend to do with the campaign and where TechSoup is going as an organization. It makes it more complicated to do an offering that engages everyone, but we really believe as TechSoup that it's worth it. And it was, in our case in particular, really crucial for us to structure our offering that way. Be prepared. It's a long road. So, Will alluded to this earlier. So this has been something that as TechSoup we started planning about 3 years ago. We're about 1 year into a campaign raising the money that we anticipated originally being 3 years. We think we will be in a position where we can hopefully wrap up the fundraising part of it in 2 years, but it is definitely a long road and not something that's possible to implement quickly. And just in conclusion, on the question of where can you go for impact investment, so this is not in any way intended to be a comprehensive list. So these are just some of the places that TechSoup has gone and relationships and events that we've participated in over the course of the last couple of years as we've launched our campaign. So right at the center of this are communities. So for all of nonprofits, it's your community that knows you best, and the people in your community that know you and love you are going to be one critical source of impact investment in a campaign like ours. A nonprofit finance fund, they themselves are a nonprofit that specializes in helping nonprofits with loans and debt financing. They've got really an amazing team and expertise that was crucial in guiding us along the way. Cutting Edge Capital helped us a lot with securities law and structuring. SVX US is a online impact investment marketplace that we've been using as an online transaction platform for our offering. And the ability, is, in particular if you're doing small minimums, to have an online platform that gets transaction costs low is really crucial. SOCAP and Colorado Impact Days are two examples of events that are convenings of impact investors and nonprofits and social enterprises trying to raise capital. And we had a lot of really terrific advice and relationships that we formed in networking at those events. Mission Investors Exchange is a network of foundations that do impact investing and program-related investing, and we've been partnering with them, and they've got terrific resources for nonprofits that are interested in working with foundations in doing impact investments. Foundations like Bill and Melinda Gates Foundation, so the foundations that support you are another great source of capital. And then Will talked about Kiva, RSF, and impact assets, so I won't say much more there. Other than to mention that one of the things that we've really seen in our campaign is that different kinds of investors, different types of organizations want to participate differently. Some have decided to invest in TechSoup through donor-advised funds, some through foundations, some have chosen, rather than making an investment, to do a donation or a grant. So we've really needed to keep things flexible so that we can accommodate the specific needs and the preferred approaches of different kinds of investors. So with that, I think that concludes the slides that we prepared, and why don't I turn it back over to Seema to take us into Q&A.
All right. Thank you, Will. Thank you, Ken. So just so you guys know, if you have questions, please use the chat box that you see on the left-hand side of your screen. We have about 10 minutes to go through the Q&A. So I'm going to go ahead and start kind of with some of the more foundational questions. So, and I think maybe I Ken, if you want to maybe take this one. How can I convince my board that they should support this? How early should I start? And what kind of expectations should I set up for them in terms of when we will be able to raise the money and what role they should play?
Well, I can just say, sort of based on our experience here at TechSoup, that we started to engage our board probably more than a year before we actually launched the campaign. So the professional advisors like Cutting Edge Capital, who have been guiding us since the beginning, we brought them into our board member meetings to present to our board. I think our board was initially a bit skeptical about this approach, in particular because it's something that hadn't really been tried before. So TechSoup, we're the first nonprofit that the SEC qualified to do the particular kind of offering that we're doing, and so our board wanted to make sure that we were taking the right strategy. We had really strong leadership from our CEO Rebecca, and a lot of commitment to trying to make this work. And over the course of the year, we were able to convince our board that it was a good strategy for TechSoup. And just sort of in terms of our timeline, I think it was more than 2 years that we started planning before we actually launched, and we engaged our board for more than a year of that. And we have been anticipating that it will be a 2 to 3 year process of raising the capital. So it's definitely a long haul.
Okay, perfect. We have another question. Will, maybe you want to take this one. In terms of, this is sort of more of a marketing question, but in terms of, when you're marketing to your donors, how do you kind of separate impact investing versus general fundraising, just in terms of, marketing and messaging and your overall mission?
It is problematic. I think what you have to realize is a lot of the people that you're talking to for dollars have limited bandwidth to focus on your opportunity. So all of a sudden, if your organization is coming to them with 2 specific asks and competing asks, that can get really problematic. We've seen it at Kiva. People get confused. Wait, how am I going to get a return? I thought Kiva was 0%. Are you changing the business? Are things changing? And so I think there has to be a really coordinated effort to ensure that you're proposing something specific to the right people, that you have your fundraising folks that are talking to the people most likely to give a grant, maybe follow up if it's clear that an investment is better, and do the same on the investment side, because that can complicate efforts. But I think you are looking at different pools of capital, and so it's ensuring that you've done the education ahead of time, that when you go for an ask, you have the appropriate product for them, whether it is a grant, if you're talking to a donor, or whether it is an investment if you're talking to the investment officer that's part of a foundation.
Okay. We have another question from Rebecca. How have any of these initiatives worked with local or state governments to invest for potential savings in improved outcomes?
So, Seema, this is Will. I can take that one. I would point to the work that Kiva Impact Capital has done. They've looked at really kind of their hours to own product, where they teamed up with specific city governments to offer investable opportunities in those jurisdictions to allow for improved outcomes. And so I think they worked with the folks here in Denver, where I am today. They've done a lot of work in Baltimore and in Minneapolis. Mercy Corps in the Northwest in Portland has done a really interesting initiative, I think with support from local governments, allowing individuals and communities that historically had never invested to actually invest in their own community for better outcomes in their community, and investing in real estate. And that's allowed them not only to build up capital, but to build up that neighborhood capital as well. So there are certainly some really interesting initiatives out there. And so I'd highlight kind of what Mercy Corps did in Portland, what Kiva Impact Capital has done in Denver, Baltimore, Chicago, and Minneapolis, among others.
All right. So we have another question here. I think this one is for you, Ken. How does TechSoup verify the investment is 10% less of net worth?
Right. So there's some requirements, as this question refers to make sure that the investors are taking on investments that are suitable for them. And one of the requirements is that for the kind of offering now we're doing, that an individual investor can't invest more than 10% of their net worth. So we work with SVX as the impact investing marketplace that manages our transactions. They have an affiliated broker-dealer called Bequia Securities, and they handle the securities transactions. And so they do that suitability check and gather information from the investors when they go online to start the process. So they'll collect information that they need to make sure that the net worth requirements being met. So it's because we don't have expertise in-house on how to manage all of these investment requirements. So we've partnered with SVX as a platform to handle that for us.
Okay. We have another question here from Dwight. What triggers the SEC requirement to register an impact investment ask?
So I can take that, Seema. So really there is an SEC requirement to register any investment, regardless of whether it's an impact or not. What the SEC does offer are certain exemptions. For example, the $30 million I'm raising for this refugee vehicle, currently we're using a specific exemption because we are only talking to and taking money from what are called qualified purchasers. So investors that have proven they have at least a certain level of investing acumen and a certain level of net worth. The SEC in this country use wealth as a proxy for investing acumen. So if you have $20 million, in the case of a trust or a corporation or a foundation, then you're viewed to be a qualified purchaser, and you can make an investment into an investment that is a product that, either impact or not, that has not been registered with the SEC because it's using an exemption. Same thing with the Reg A exemption that TechSoup is doing. As long as you're fulfilling certain requirements, you are allowed to issue investments without going through the full SEC regulation and registration. And same with the charitable issuer exemption. But if you want to go and really sell something to everybody in the United States with no verification of who they are, what their investment acumen is, or their net worth is, that looks like basically selling stock. And so for that, it's the full public markets registration, which is obviously costs a significant amount of money and a significant amount of time.
Perfect. So we have a question here, and I think this is probably going to be a longer answer from Fernando. Can you suggest social impact investors that have a specific interest in the UN SDGs? I think my suggestion would be maybe to email Ken. Ken, is that probably the appropriate thing to do? I imagine that's a longer answer.
Sure, that's fine. I think Will and I can team up on that one.
Okay, perfect. And then we have time for about one more question. So Do you have any example stories of nonprofits who have moved impact investments for their endowment funds?
So in terms of examples, I think we see that not as often as you would expect, right? You would expect going in that most nonprofits understand this space better than the endowment at, let's say, a university or a corporate pension plan. However, what I have found just over the course of my career is the norm tends to be the chief investment officer and her staff really focus on generating returns so that the 95 other people on staff can give it away. And so nonprofits tend to have this really bifurcated, you've got 95% of the people really focused on philanthropy and impact, and the rest tend to be really focused on making money by investing in hedge funds. That being said, we are now seeing the Ford Foundation, for example, committing $1 billion to impact investing. The MacArthur Foundation has made a lot of news and talked a lot about making impact investments. The Rockefeller Foundation as well. But I think there's so much money either on the sidelines, and by sidelines I mean earning almost nothing in a bank account, which I think could do much more good for the world and earn a whole lot more in a TechSoup note, for example, or a Calvert note, or a Kiva product. You also have a lot of money that is invested in hedge funds or private equity firms that are really sponsoring and contributing to a lot of the problems that these same nonprofits are trying to solve. And so I think there could be a lot more done, and I think we'll get there. It's just it's maddeningly slow at how little has been done so far by those groups.
All right, so it looks like we are getting close to the end of our webinar. Thank you so much, Will and Ken. If you guys have questions that we weren't able to get to, I have their emails up here on the slide, and we'll be sending this out in the follow-up email post-webinar. Before we close out today, if you guys don't mind, we have a post-event survey, so any feedback that you have for us is always really helpful. If you're on social media, feel free to give us a follow on Facebook, Instagram, Twitter. We also have a blog where we post tips and tricks and other resources at blog.techsoup.org. Also, please check out Kiva when you get a chance at www.kiva.org. We have a few webinars coming up for the rest of the year, so you can see the full list here. And like I said earlier, we'll be sending this out in the follow-up email. TechSoup also offers TechSoup courses and then TechSoup services. If you are interested in taking a course, we do offer a 10% discount to our webinar attendees. And then Stephen will be sending a link in the chat with any of our relevant classes that we have coming up. All right, so that brings us to time. Thank you again, Will, and thank you, Ken. And thank you guys for attending our webinar today, and we look forward to seeing you.